Hello viewers, welcome to my channel. I'm Hasham Ali Khan. Last video I have completed the first main problem on valuation of goodwill. Now in this video, the second, third, fourth, fifth, four problems I'm going to continue. So watch the video till the end. Don't skip in between. So in examination, very often they will ask the problem on this valuation of goodwill. Apart from that, theory may also be asked. So if you want the complete command on the subject, watch all the videos from beginning till end. Then only you can be able to get the confidence on the subject, advanced accounting, on this topic of valuation of goodwill. So if you have not watched the earlier videos, I suggest you go to the playlist of my channel, select the subject Advanced Accounting 2023, watch the videos, be perfect about the concept. Now I'm going to start the second problem, but before that I expect my viewers to have a printout of the problems which I have given in the link under my description. Always keep it ready. Take the screenshot of the points written on the board, then I'll explain every point in detail. Now, see the second problem. Problem number 2. From the following balance sheet of Soft Look Company Limited as of 31st March 2010, find out the value of goodwill. So, particulars, note number, amount, equity and liabilities. So, here shareholders fund, share capital, reserves and surplus, non-current liability, we have long-term borrowing, current liability, trade payable, short-term provisions, total. Then asset side, non-current assets, fixed assets, tangible, intangible, non-current assets, other non-current assets, then current assets, inventory, trade receivable, cash equivalent. This is the complete format of the balance sheet given. Now notes to the accounts. Share capital 45,000 equity shares of 10 each fully paid. Reserves and surplus consist of profit and loss account. Long-term borrowings consist of 9% debentures. And trade payable consist of creditors. Short-term provision consists of provision for taxation. And tangible assets, land and building, plant and machinery. Intangible asset, goodwill. Then non-current investments, long-term investments, face value 25,000 at the rate of 5%. If nothing is given, we assume these long-term investments are non-trade investments. It is government securities. So while calculating capital employed, we should not consider non-trade investments. And the income arising on that non-trade investments also should not be considered. Other current assets, preliminary expenses, fictitious assets, imaginary asset. So we should not consider these preliminary expenses. So overall, 3 items we are not going to consider for calculating capital employed. The first item, goodwill, given in the balance sheet, should not be considered. Non-trade investments should not be taken. And fictitious assets, preliminary expenses, should not be taken. So don't take these 3 items and take all other assets. Then goodwill should be valued at 5 years purchase of super profit method. So we have to apply super profit method. Average profit is rupees 75,000 for the last 3 years. Fair return on capital employed is 10%. This is the NRR. Normal rate of return 10%. Past average profit 75,000. That's all. This is the information given. First of all, we need to calculate capital employed. See here. Calculation of capital employed. The land and building 1 lakh, plant and machinery 2,50,000, inventory is 1,80,000, trade receivable 50, cash and cash equivalent 10,000. Whatever is given in the balance sheet I have taken, except 3 assets I have not taken. Goodwill is given in the balance sheet, I have not taken. Non-trade investments, long-term investments I have not considered because that is non-trade. Third, fictitious assets, imaginary assets, preliminary expenses, don't consider. Remaining all assets I have taken. Outside liability consists of debentures, then trade payable, provision for taxation. These are the outside liabilities. Deduct, will get 4,25,000 capital employed. Right? Now, normal profit is equal to capital employed into NRR, normal rate of return. Capital employed 4,25,000. and NRR is given in the last line of the problem, 10%. So 10% of 4,25,000, 42,500 is the normal profit. Remember, for calculating super profit, we require FMP and NP. Future maintainable profit and normal profit, these two things are required for super profit. So NP we got. Now future maintainable profit. Actually FMP is the past average profit adjusted for future changes. So here past average profit is given 75,000. From this past average profit we deduct the income from non-trade investments. Actually non-trade investments should not be considered in assets. At the same time, the income on non-trade investment should not be considered in profit. When profit 75,000 is given, it means it includes the income from non-trade investment. Now we subtract. How much is the non-trade investment? If you see the problem, 30,000 rupees is the value, book value, but the face value is 25,000. You can see that note. Non-current investment, long-term investment, the balance sheet value 30,000, face value 25,000 at 5% interest. The interest will be calculated on the face value, not on the book value. Face value 25,000. So 5% of 25,000 you will get 1250. Subtract 1250, you will get 73,750. This is the FMP, future maintainable profit. So we got FMP, we got NP, so easily we can calculate super profit. FMP minus NP, FMP is 73,750 and NP is 42,500. So 31,250 is the super profit. Now goodwill is equal to super profit into number of years of purchase. Here number of years of purchase is given in the last line. Goodwill should be calculated at 5 years purchase. So multiply by 5. 31,250 into 5, 1,56,250 is the value of goodwill. That's all. Now, note. In note, you should write down that non-trade investment should not be taken in calculating capital employed. Similarly, the return on non-trade investment should not be considered in the profit. That's it. This is the end of problem number 2. Now, problem number 3. See the third problem. The balance sheet of Sriman Company Limited disclosed the following position at 31st March 2010. The particulars: equity and liability, shareholders fund, share capital, reserves and surplus, non-current liabilities. There are no non-current liability. Current liability, trade payable, short-term provisions, total. Then assets consist of non-current assets, fixed assets, tangible, 5,90,000, inventories, trade receivable, cash and cash equivalent. This is the complete balance sheet given. You are asked to value the goodwill of the company considering the following. Reasonable rate of return 12%. This is normal rate of return, NRR. Rate of income tax may be taken as 50%. Why this income tax rate is given, I'll explain. Goodwill is to be valued on the basis of 3 years purchase of super profit, just like the previous problem. For super profit, we need normal profit and FMP, right? And notes to accounts, share capital is given, reserves and surplus, capital reserve, P&L account, trade payable, sundry creditors, short-term provision consists of provision for taxation, 1,10,000. Tangible assets are land, building, plant and machinery. That's it. 1 or 2 new points are there. Every problem you will find 1 or 2 new points, remaining all 90% points are same. So focus on the new points. What new point we are going to come across in this problem? Calculation of capital employed. Tangible assets. The tangible assets 5,90,000 given in the problem. Inventories 2,30,000, trade receivable 1 lakh, cash and cash equivalent 1,04,000. Whatever is given in the problem, same thing I have taken the assets. Now outside liability are trade payable, provision for taxation. We don't have any long-term liability, non-current liability we don't have. Only current liability we have. That is trade payable and provision for taxation total. So capital employed is 7,72,000, right? Now, this is a capital employed. One point is given that provision for taxation for the current year is 1,10,000. 1,10,000 is the provision for taxation of the current year. and the rate of income tax is 50%. That means whatever profit we have earned, 50% we are paying the tax and remaining 50% we are having profit after tax. So when we are given that 1,10,000 is the provision for tax, that means automatically understood the profit after tax is also 1,10,000. Because if 100 rupees are earned, 50 rupees we are paying the tax and remaining 50% is the profit after tax. Same is the case in our problem. 1,10,000 is the provision for taxation for current year and provision for tax 50%. It means profit after tax is also 1,50,000. So profit after tax of current year will be 1,10,000. So from capital employed, we deduct half of the profit of the current year to get average capital employed. Already I told you in the previous videos. So capital employed 7,72,000 we got it. Half of the profit earned during the year, 1,10,000 into half, 55,000. Deduct 55, average capital employed 7,17,000. Now normal profit, average capital employed into NRR. NRR is 12%. So 7,17,000 into 12%, 86,040. This is the normal profit. Now we need the FMP. FMP is the past average profit adjusted for future changes. But in this problem, past profits are not at all given. So whatever current year profit is there, that we assume that as a future maintainable profit. So current year profit how much? 1,10,000. Already we have decided profit after tax of current year will be 1,10,000. So whatever we earn profit during the current year, we expect that in future also we will earn the same profit. So FMP also 1,10,000. So super profit is equal to FMP minus NP. So 1,10,000 minus 86,040. NP is 8640. 23,960 is the super profit. Now goodwill is equal to super profit into number of years of purchase. It is given in the problem 3 years of purchase. So multiply 23,960 into 3, 71,880 is the value of goodwill. That's it. So 1 or 2 new points you came across. Watch, concentrate, focus on those points. Now, fourth problem. Abhishek runs a chemist shop. His net assets on 31st December 2005 amounted to 22 lakh. So Abhishek is running a chemist shop. The net assets applied in the business is 22 lakh. After paying a rent of 24,000 a year and salary 30,000 to the chemist, he earns a profit of 1,80,000. So every year he is earning 1,80,000 profit after paying the rent of 24,000 and after paying salary to the assistant chemist is 30,000. His landlord, who happens to be an expert chemist, is interested in purchasing the shop. That means Abhishek is running his business in a rented shop. He is paying the rent. Now the landlord, the owner of the premises, is an expert chemist. He wants to buy the business of Abhishek. Now 10% is considered to be a reasonable return on capital employed. So 10% NRR. You may assume that the value of the premises to be 2,40,000 and the reasonable remuneration of the new proprietor as chemist is 40,000 per annum. Ascertain the amount, if any, to be paid for goodwill. Now the value of the premises. Suppose I am the landlord. My tenant is Abhishek. Now Abhishek wants to sell away his business. I want to run my own chemist shop. I am also expert chemist. The value of the premises is 2,40,000. And the assets invested by Abhishek is 22 lakh. So if I purchase the business of Abhishek, so 22 lakh rupees are the assets invested by Abhishek and 2,40,000 is the value of the premises I am putting in the business. So total capital employed will be 22 lakh plus 2,40,000, 24,40,000. Net assets of Abhishek 22 lakh, value of premises 2,40,000. So capital employed will be 24,40,000. Suppose if I purchase the business of Abhishek, then the total capital employed of my business will be 24,40,000. The normal rate of return in the problem, it is given 10%. So 24,40,000 into 10%, 2,44,000 is the normal profit. This is the normal profit. Now future maintainable profit, FMP, we have to calculate. What is the past average profit earned by Abhishek? 1,80,000 is the past average profit. To that past average profit, we adjust the future changes. Future changes means some expenses were incurred by Abhishek in the past, but in future, those expenses are not payable. Example, the rent of the premises which was paid by Abhishek. Now it is our own premises. There is no need of rent. That means money saved. Expenses are saved. So we add back. The expenses which are paid in the past but not payable in future should be added back. Expenses not payable in future. Rent not payable, 24,000. Similarly, chemist of Abhishek. Abhishek was paying salary to the chemist 30,000. 30,000 we add back. So total 2,34,000. Now in future, the salary of new chemist is 40,000 given in the problem. The landlord, his own remuneration will be 40,000. So 40,000 salary of the new chemist. So net FMP will be 1,94,000. The future maintainable profit will be 1,94,000. Now we compare FMP 1,94,000, normal profit is 2,44,000. That means the super profit will arise whenever FMP is more than NP. Then only there is goodwill. But this is the first case where FMP is less and NP is more. There is no super profit. Hence, there is no goodwill to be paid by landlord to Abhishek. No goodwill of the business. Normally, other businesses are earning 2,44,000. But Abhishek business is going to earn 1,94,000. That means the FMP is less. So no question of any goodwill. Goodwill will be zero. That's it. This is the end of fourth problem. Now, fifth one. The balance sheet of X Limited as on 31st March 2005 is as follows. Shareholders fund, share capital, reserves, long-term borrowings, trade payables, short-term provisions. Then total. Non-current assets are fixed assets, tangible assets, intangible assets, non-current investment, other non-current assets, then current assets. Share notes to the accounts. Share capital are given 10,000 equity share of 10 each, 8%, 5,000 preference shares of 10 each, reserves and surplus, general reserve, long-term borrowings, 8% debentures, trade payables, sundry creditors, short-term provisions, provision for taxation, non-current investments, investments in 5% government loan. This is non-trade investment, we should not take. Other non-current assets are preliminary expenses, discount on debentures should not be taken. Both these preliminary expenses and discount on debentures are fictitious assets. There itself you write on, should not be considered. Now the average profit of the company after deducting interest on debenture and taxes is 31,000. The present market value of machinery included in fixed asset is 5,000 more. That means machinery value should be increased by 5,000. Expected rate of return 10%, NRR 10%. Evaluate the goodwill of the company at 5 times of super profit. The super profit into 5 will give you goodwill. So first of all, for calculating super profit, we need capital employed. Calculation of average capital employed. So fixed assets. In the problem, fixed assets are given 1,80,000. And in adjustment, it is saying that machinery value is 5,000 rupees more. So we increase the fixed asset by 5,000. So 1,85,000. Current assets are 1 lakh. The total is 2,85,000. We have not taken investment because it is a non-trade investment. Then outside liability, provision for taxation, 8% debentures, creditors, subtract. So capital employed, we got 2 lakh. Now average profit. In the problem, it is given average profit 31,000. From average profit, we subtract the return on non-trade investment. So in the problem, it is given non-trade investment consists of 5% government loan, 20,000. So 20,000 into 5%, you will get 1,000. Deduct 1,000, 30,000 is the FMP, future maintainable profit. Now capital employed, we got 2 lakh. Less half of the profit of the current year. The 30,000 into half is 15,000. Deduct 1,85,000 is the average capital employed. Now, normal profit is equal to average capital employed into NRR. NRR is given in the problem, 10%. So 1,85,000 into 10%, 18,500. So we got normal profit 18,500. Future maintainable profit 30,000. So super profit is equal to FMP minus NP. 30,000 minus 18,500, 11,500 is the super profit. Now, goodwill is equal to super profit into number of years of purchase. It is given in the problem 5 years of purchase. 5 times of super profit. The super profit 11,500 into 5. 57,500 is the goodwill. This is the end of problem number 5. So in this video, I have explained you second, third, fourth and fifth. 4 problems I have completed. Inshallah, we'll continue the next problem in the next video. So if you are satisfied, give a like to the video, share my channel, give your comment, subscribe if you have not yet subscribed. And by the super thanks which is given below my video, inshallah, we'll continue the next problem in the next video.